Hello everyone. I thought I would put a sunset in as the semester is coming to an end and a bank reconciliation is done at the end of the month before you close off the books. So let's have a look. In this video I'm going to work through an example so you become masters at bank reconciliations. If this seems a little bit out of sync, what I've done when I came to the end of this video was I got the solution. So then I thought, let me throw in the solution so you understand exactly what we're trying to do with the bank reconciliation. Now at the end of this exercise, or at the end of this video, we are going to get a balance in our books for Calibre Education in our bank account after we've taken into consideration items off the bank statement and we've accounted for them. We get to a balance in our bank account on the debit side, which is a positive balance of 39,323.95. But at the same time, we are recording transactions in our books on behalf of the bank. In our books, we do a bank reconciliation statement. So you can see this is for March. And once we've taken into account items that were in our books and errors that weren't shown on the bank statement from the bank, we get to a total of 39,323.95. So as you can see, the purpose of a bank reconciliation is to get the same amount on the bank reconciliation statement as the balance in the bank account of our books. So there I've put an arrow on the bank reconciliation statement. The balance as per the bank account is the same as the balance in our bank account in our books, and that is an ideal situation after we've reconciled and we've got to the balance as per the bank account from the balance as per the bank statement. Then we have 1. So I thought I'd just throw this in. So it might seem a little bit out of order when we get to the next slide, but it's nice to know what we're actually trying to achieve when we do a bank reconciliation. So what you have in front of you is our business, Calibre Education. We bank with the bank, and we have in front of us two different versions of the same information, but we have a bank reconciliation statement which we draw up in our books, and remember we Calibre Education, on behalf of our bank. So this is called a bank reconciliation statement, and in the bank reconciliation statement there can be two formats depending what textbook you're using. I will start with this first format that I've taken out of a ICB textbook, Independent Certified Bookkeepers textbook, and this one is quite often in college textbooks where there's a debit column and a credit column, but we get to the same answer. It's just done a little bit differently. So in the example we're looking at, we are starting with an unfavorable balance, and what I've done is I purposefully left out the brackets, because when you start with an unfavorable balance in our bank account at the bank, in the eyes of the bank, Calibre Education is an asset. So we got an unfavorable balance, So when there's an outstanding EFT that we have in our cash book payments or our cash payments journal, but it's not yet on the bank statement, it gets added because it's going to make our overdraft bigger. Then there's going to be outstanding deposits. In our cash receipts journal, we have recorded that we've deposited money, but the bank is not yet aware of that deposit. That there is now going to make the overdraft smaller. And then something like an EFT that was incorrectly debited twice by the bank will make the overdraft smaller. So if I look here, this is the same type of thing as above. It's a bank reconciliation statement, just done with a debit column and a credit column. In this format here, the balance as per the bank statement unfavorable will go in the debit column, indicating that Calibre Education is an asset to the bank. Then if there's an outstanding EFT, the bank would debit our account. In their eyes, it's going to make that unfavorable bank balance, the overdraft, bigger. An outstanding deposit will make it smaller, and then a correction of an EFT that was debited twice is also going to make the overdraft smaller. So if I said in this first example, 48,000 plus 2,875 and 27 cents, less the outstanding deposit, less the EFT that was incorrectly debited twice, it's going to give us a balance at the end of February, because this year has been drawn up underneath there, it says for February. It's going to give us an overdraft balance, an unfavorable balance, as per the bank account of 47,383.99. This bank reconciliation statement is for February. We're going to look at the transactions for March. And if you did it in this format with a debit and a credit column, at the start of March, the balance as per the bank account is going to be 47,383.99, and it's unfavorable, or we're in overdraft with the bank. So this is our situation at the start of March. And as I said, we draw up this bank reconciliation statement in our books, looking at the situation from our bank's point of view. And at the end of February, according to the bank, Calibre Education in their books is an asset, because Calibre Education is in overdraft. When we finish this exercise, you will see that we go from an overdraft, an unfavorable bank balance, into positive territory. So in our tests and exams, we're going to use this top format in order to calculate or reconcile the bank statement balance with our bank balance, because the purpose of a reconciliation is to record those differences that are causing the bank balance in our books to be different to the bank balance on the bank statement. So at the end of the process, the reconciled bank reconciliation statement balance will equal the balance of the bank account in our books, and I'm going to show you how to do that. So in front of you, just cleared everything up. You have the bank reconciliation statement for February of Calibre Education, and this document is recorded in our books, Calibre Education books, on behalf of the bank. So these numbers here you see from the bank's point of view. In the books of the bank, Calibre Education is an asset because Calibre Education is in overdraft. We are going to look at the transactions for March, but this is the bank reconciliation statement from February, and part of the process is we're going to compare the bank reconciliation statement from February with the bank statement that we received from the bank for March. So March is our current month. Now what we receive from the bank is a bank statement, and this bank statement is for March. This green little sign here says just ignore the balances. We're more concerned with what's in the debit and the credit column. According to the bank, we now have right at the bottom there a balance of 623 Rand and 32 cents. And it has CR next to it, which means that our balance at the end of March is now favorable, and Calibre Education to the bank is now a liability, and the bank owes Calibre Education 623 Rand and 32 cents. An increase in liability results in a credit. Those are the accounting rules. On the bank statement, in the credit column are all deposits that have been made to Calibre Education. In the debit column are all the payments. So credits would result in the bank owing us more or decreasing our overdraft, but an increase in liability, and debit a decrease in liability with a favorable balance. So that's what those debit and credit columns mean when we get a bank statement. And a bank statement is a summary of transactions, in this case of Calibre Education, for the month of March. So it's all the movements on our bank account according to the bank. So this is what the bank whom we bank with has records of. It's our records according to the bank. Now back to our books. We're given, so in a test or question, we're given the bank statement, we're given the previous month's bank reconciliation statement, and we're given what payments have been made for the month of March. So in March, all these payments were made. We don't need the details. We're only concerned about the amounts that would appear in the cash payments journal in the bank column. So in front of you is a summary of what would appear in the bank column of the cash payments journal. And before we find the differences which result in our bank statement amount and the bank balance in our books to differ, before we look at those differences, the payments for total before amendments for the month of March were 14,697. So when we do the reconciliation, that is going to be our starting point for the payments. So this here is a summary of what payments are in our books, Calibre Education books. Then we also have a summary of the cash book receipts, and what this document is saying is these deposit slips here were used to record these deposits. So these deposits here, in theory, should all show up on the bank statement. But I can tell you now that they won't all show up on the bank statement, because very often we've put something in our books on the 31st, for example, and the bank hasn't processed the deposit yet. So it's going to be an outstanding item. If the bank makes a mistake, the mistake will go on the bank reconciliation statement. If we have made a mistake or not aware of things that have happened to our bank balance, we are going to put the information in our books, either in our cash receipts or our cash payments. So this at the moment is a summary of all our receipts before we take into account those unknown receipts that we will establish in this exercise. You are going to be required in this exercise to complete the cash receipts journal and the cash payments journal, because there's going to be information on the bank statement that we weren't aware of, like direct deposits and debit orders. They're going to be added to our books. We're going to open up a bank account. We're going to total up the cash receipts and the cash payments, post the information to the bank account. Then we're going to draw up a bank reconciliation statement at the end of March. So 4 things. We're going to complete the cash book receipts. We're going to complete the cash book payments. That's cash receipts journal and cash payments journal. We're going to take the totals, the new totals, to the bank account in our books. And we're going to draw up a bank reconciliation statement. That's what number 1, 2, and 3 is requiring us to do. Now, before I get on to some steps in order to complete a bank reconciliation, the first thing you need to do is, from those previous slides, before amendments, before we are notified of the differences between the bank balance on the bank statement and the bank balance in our books, we need to put in these, let's call them opening balances. So before all the information is recorded, we start with the total receipts before amendments, and that would be given to you in the question in the previous slides. You can go back in the video. You would have seen the total receipts before amendments was 103,206.18. The payments before amendments, things that are going to be added, for example, bank charges. Before we bring those things into account, the amount is 14,697.44. Then off the bank statement, there was a balance right at the end, a positive balance, 623.32. This here is the bank reconciliation statement. This is our cash receipts journal, and this is our cash payments journal, before all the additional information is taken into account. And this here is at the start of the month. We were in overdraft. So 1st of March, the opening balance is on the credit side, 47,383.99, and this amount was obtained from the bank reconciliation statement for February at the start of the exercise. So the first thing you need to do is to put in, I'm going to call it opening balances on your answer template. So the opening balances before you start the reconciliation process. And then what we're working towards, when we fill in all the reconcilable items, you will get a balance as per the bank account here. And when you balance this bank account, these two amounts will equal if you've reconciled correctly. So the purpose of a bank reconciliation is to end up with the balance as per the bank account on the bank reconciliation statement. That records information from the eyes of the bank, and that balance there should equal the balance in Calibre Education's general ledger bank account. Right, step number 1, compare the bank statement with the previous month's bank reconciliation statement. Cross off all items and circle items that do not match. So let's work through this. Compare the bank statement, there it is in the background, with the previous month's bank reconciliation statement, which was given, and that was for February. So we started off with an unfavorable bank balance. This is February's bank reconciliation statement. It was given to us. We need to check that item, and that item if it appears on the bank statement. And I see 2875, 167,764, 167,764, 239,606, 239,606, 2396.06. So cross it off. There it is, there it is. If there was an item that wasn't crossed off, it would need to be circled. If an item is left on the bank reconciliation statement, circle it as I did there and enter this amount on the current bank reconciliation statement for March. But in this example, all amounts on the February bank reconciliation statement were accounted for. Nothing here was not recorded by our bank in the month of March. Quite nice. Right, step 2. Compare the bank statement's credit column, with the cash receipts journal, duplicates of deposit slips. Cross off the common items and circle items not matched. So we are looking now at our cash receipts journal and the credit column. And if we look, 21673, 21673, 23737, 23737, 8256, 8256, 1745. Oh, there's a number that's quite close. 17645. And if we see they both have the same number, 460, and this one has the same number, 460, but the amounts are not quite the same. So we're going to have to see who has made a mistake, either the bank or us, and correct it in the appropriate place. Right, 928856 I don't see. 22,705.36 I don't see. So let's see what we need to do. Right, that's an arrow that crossed a line, they crossed that out. Let me rub this out quickly. And just get my highlighter back. Let me rub that out again. So there, that 21679, they were crossed out. 23737, 23737, 8256, 8256. I don't see anything else I can cross out at the moment. What was not crossed out needs to be circled because we're going to deal with that. All these items here have not been reconciled yet, the circles, but the lines, they have been matched and crossed out. The amounts that have been matched get crossed out. This here, just to recap, was our receipts. We're comparing our cash receipts journal with the credit column of the bank statement. Items that were not matched get circled to deal with at a later stage. Right, next one. Compare the bank statement's debit column with the payments. Right, so the debit column with the payments. Once again, cross off common items and circle items not matched. So if we're going through here, there's 3527, 3527, 3527, 3527, 1322, 1322, 2645, 2645. Now look here, 146 and 131. They do actually have the same reference. EFT 1124, Calibre Education 1124, EFT. We got in our books 14697 and the bank has 13197. One of us have made a mistake. We're going to have to see the information to find out who has made the mistake. 29395, 29395 crossed off. There I can see this one here has been, the same amount has come out twice. It looks suspicious. 1175, 1175, 161672, 161672, 734, 734. Now, is the 1976 there? I don't see it, and I don't see the 1256. And then there are a whole lot of items in this debit column that haven't been crossed off according to our books. So all those items that haven't been crossed off need to be circled. So there are quite a few issues here. We need to investigate all these circles to find out if the bank has made a mistake, or if we have made a mistake, or maybe we don't know of certain transactions that have taken place that the bank does know of, like a direct deposit or a debit order. Then also items like this, we have made a payment and the bank hasn't had a chance to process it before they sent us the statement. Now we go on to the additional information, deal with the additional information, and I've written here, don't forget to cross off each item as you complete each, that says down there, discrepancy. So the bank has recorded the EFT number C1124 at the correct amount. So if the bank is correct, on the bank statement is correct, we will do it in our books, either the cash book receipts or the cash book payments, depending on the amount, if it's big or smaller. More about that in a moment. The deposit corresponding to CD 460 was credited to the bank statement at the correct amount. We have made a mistake. Our books, that's I'm not sure, ditto, which means our books as well, our books. The direct deposit on the 7th of March was from a debtor in settlement of his account. Now what happened was, this debtor put the money straight into our bank account. It's on the bank statement, but not in our books. So it's going to go in our books. The direct deposit on the 21st of March was a VAT refund from SARS. It's going to go in our books because we don't know about it until we got the bank statement, because it was a direct deposit. The debit orders in favor of these two people that we needed to pay for whatever reason is on our bank statement, but not yet in our books. The debit order in favor of Eskom is for the business. It's a payment. It needs to go in our books. The debit order payment needs to go in our books. EFT number CE1126 was in error debited twice on the bank statement. That needs to go on the bank reconciliation statement because the bank has made this payment twice in error. So now we need to deal with all these. Let's go. So number one, the bank has recorded the EFT number CE1124 at the correct amount. The bank has recorded this at the correct amount. We went and put in our cash book payments an amount of 146.97. We should have put in our cash book payments 131.97 because the bank is correct. Now, in order to, shall we say, reverse this error, this amount here, 146.97, is too big in our cash book payments. To reverse it, we need to put it into our receipts. So in our cash receipts journal, we say business error on overstating EFT number CE1124, 15 Rand. We went and put in our cash book payments 15 Rand too much. So to take it out, we must put it in the receipts. And there it is, recorded. Don't forget to cross off the items when we've dealt with them. So I cross off the 146, that did have a circle around it. I cross off that 131, that had a circle around it. And in the additional information up there, I go and cross it off. Because if you don't cross these things off, and you get to the end of the bank rec and you go back and see what you haven't dealt with, you're going to do the same thing twice and you're going to get confused. Cross off when you've dealt with an item. Next one. The deposit corresponding to CD 460 was credited to the bank statement on the 19th of March. There it is. At the correct amount of 17,645. In our receipts, we had 17,545. Now in this case, the error is 100 Rand smaller. We made the error, and this should have been 17,645. To make it bigger, we can put it in the same journal when we make it bigger. If it was already too big and you need to make it smaller, you put it in the opposite journal. So in the cash receipts journal, you're going to add to the cash receipts journal the business error on deposit, 460, and the difference between the two, this was 17,645 and this was 17,545. We cooked ourselves by 100 Rand. In our books, we should have 100 Rand more. We made a mistake by saying 17,545 when it should have been 17,645. So we record it in our cash receipts journal. We must cross off the item when we have finished it. Then we move on to the next item. Number 3. The direct deposit on the 7th of March was from a debtor, J. Ndlovu, in settlement of his account. There we go. That went straight into the credit column of our bank account, 192221. We didn't know about it until we received the bank statement. So we need to add to our receipts the direct deposit from Ndlovu, 1922.21. When we finished with it, we must cross it out. Right, number 4. The direct deposit on the 21st of March was a VAT refund. There it is, 3833.69. We only became aware of this deposit when we received the bank statement. We put it into our receipts journal. There it is, 3833. Direct deposit, VAT refund, 3833. And once we're finished, we need to cross out that circle. And remember to cross out that additional information, number 4. So now we've dealt with the direct deposits that we didn't know about. Then there were debit orders in favor of these people. They weren't authorized by Calibre Education, the business. The bank has made a mistake. If the bank has made a mistake, it gets recorded on the bank reconciliation statement. We need to add back the payments that were made that we didn't authorize. So add unauthorized debit order. There the two are. And we dealt with those circles now. Who made the mistake? The bank. If the bank makes a mistake, it must go on the bank reconciliation statement. Once we've finished, cross off the items so we don't have confusion towards the end of the question. So now we've dealt with these unauthorized debits by putting the information on the bank reconciliation statement. Number 6, the debit orders. There were 2 debit orders. They came off our bank account. We did not know about those debit orders until we got the bank statement. There they are, the bottom of the page. We need to add them to our cash payments journal. Debit order, electricity. Debit order, vehicle installment. Would have been good maybe to write SBOM and Nguni Bank. They're the names. And we add that to payments. Once we're dealt with 6 and 7, we cross them off. There at the bottom of the page, crossing them off. So now we've dealt with 6 and 7. Then number 8, it says EFT number CE1126 was erroneously, in error, debited twice on the bank statement. There, that one hadn't been ticked off. It came off our account twice. The bank made a mistake, so it must go on the bank reconciliation statement. We need to add that EFT back. 293.95 debited twice. Cross off the items when we've done it. We have now dealt with all the additional information, and as you can see, step 5 here, it says deal with the remaining circled items. And once again, don't forget to cross off each item as they are completed. So we've got here typical items that haven't been reconciled yet. And the first one is you can see bank charges. So they're monthly fees. In this case here, they're internet banking fees. There's a government levy. Now with the bank charges, you can see here, I've added up all the bank charges. Just something I want to point out. Interest is always shown separately. So don't include the interest in the bank charges amount, as you will then get the answer on your exam or in your test incorrect. Bank charges in this case consist of monthly fees, the internet banking fees, and the government levy. Interest will be shown separately. So you total up your bank charges, the monthly fees, the internet fees, the government levy, and it comes to 464.26. Now these bank charges are making our bank balance smaller, and those transactions that make our bank balance smaller need to be recorded in the cash payments journal. So we didn't know about these bank charges until we got the bank statement. So what we can do is we can now cross off the bank charges and add the item bank charges to our cash book payments. Let me just clean this up a bit. So in our payments journal, we're adding the bank charges 464.26 to the total before amendments. So there's bank charges, and what we can do is, we've already done it, cross off all those charges in the debit column. Next, we have to look for items that have not been cleared off. So we're looking for the remaining circles, and there I see interest on overdraft. Because we were in overdraft, we were charged interest, and therefore it's in the debit column. It's making our bank balance smaller according to the bank reconciliation statement. So the interest on overdraft is on the bank statement, but not in our books yet. It's making our bank balance smaller, so we need to record this interest in the cash payments journal because it's an interest on overdraft. If it was interest on a positive balance, interest on current account, it would go into the cash receipts journal. So we put in an entry in our payments because this interest on overdraft is making our bank balance smaller. So we need to add it to or into our cash payments journal, and there it is, the 437.52. Don't forget to cross off the item. Then what we need to do, we're getting to the end of this, on the total in our receipts, in our cash book receipts, our cash receipts journal, there were 2 deposits that the bank hadn't accounted for yet. Most probably because of the timing difference, we recorded these receipts or deposits in our cash receipts journal at the end of the month. We deposited the money and it's not yet on the bank statement. So this needs to go on the bank reconciliation statement. and we add outstanding deposits, and there is the 9288.56 and the 22,705. So we're now dealing with outstanding deposits that the bank wasn't aware of. Cross out the circles, and then we need to also look at those payments that were made that the bank hadn't recorded yet. So we had payments, EFTs, that were made, 1976 and 1256, that aren't on the bank statement yet. And we're going to say less outstanding EFTs, 1976.81, 1256.63. Now we've accounted for those circled items that weren't accounted for by the bank. We've done it on their behalf, where on the bank reconciliation statement. Cross those items off, and now we've dealt with the payments that weren't processed yet by our bank, and this information was recorded on the bank reconciliation statement. Those EFTs are in brackets because it's going to make our bank balance smaller. Now, after updating all the receipts in our books, we need to take that information and we need to put it into our general ledger bank account. So these items here, we reconciled. Those were receipts that we weren't aware of. We started before we were aware of all these items that were on the bank statement, and we added all those corrections or items we didn't know about, receipts, money that went directly into our bank account. We've dealt with all of those. We add up our receipts and it's 109,077. Cash, increase in cash, increase in our bank balance. Total receipts get debited at the end of the month, right year, month, day. Total receipts, where did we get that information from? Cash book receipts number 3, or cash receipts journal number 3, however you want to name your cash book, it's up to you. 109,077.88. So we've taken the receipts, added it up, and entered it into the bank account at the end of the month. We have to do the same thing with the payments. We've worked from 14,697 before amendments. We've taken into account now bank charges, interest charged, and debit orders we didn't know about. And the new payments number, or the correct payments number, once we've got all the information, is 22,369. Payments, it's a decrease in assets, will get credited, goes on the credit side. Total payments, 22,369. So we've now posted the total to our bank account. And our bank accounts, we need to balance. Looks like this. Once we've posted the total receipts, we entered the balance right at the beginning of the exercise. We got that information from February's bank reconciliation statement. We now have the correct total for the payments. If we add up, well, that's 109,077.08. We take off the opening balance, which was an overdraft, plus the payments. The balance, the debit side is bigger than the credit side by 39,323.95. So that means our receipts are greater than our payments. Total up both sides, and on the first day of the next month, 1st of April, we have a balance brought down on the debit side, and we've moved into a positive bank balance because our receipts, we received a lot of money in the month of March. That's what the account looks like, just clearly without any markings. And once we total up what we got on the bank reconciliation statement, we get 39,323.95, which is the balance as per our bank account, which we updated. And fortunately, that works out. So ladies and gentlemen, this has been a bank reconciliation exercise. The way to get good at a bank rec is just to do 3 or 4. Then you develop your own method and you won't make mistakes. The same type of items appear all the time. So once you've done 3 or 4, you will be a master at doing a bank reconciliation. And hallelujah, hallelujah. That was a long video. Well done. All the best for your test on bank reconciliations. Cheers.